Would you like to learn a brand new and innovative way to invest your extra money that has a low barrier to entry and low competition? What if I told you that it is a guaranteed method to get up to 18 to 20% return on your investment? Tax lien and deed purchasing is the only way to get into the real estate market through the back door. No credit and no loans needed. This method isn't commonly taught, and therefore the competition is very low for now. Put together a 14-hour info-packed course which will teach you everything you'll need to know to get started. Learn at your own pace, step-by-step guided video and aids to start you on the TLC deed investment process. The course offers many learning tools for new investors, helping ensure you safely invest in tax liens and deeds. Contact us today and join the buyback team.
Blessings, blessings, blessings. Welcome to Primetime Home Buyers. And you're here with your host, Lashley, your team lead and tax lien expert on an information session. As we promised, we're going to continue to talk about elements in creating your business, as well as we're going to go into taxes. These are some of the things that we said we were going to hit. So this is for our general members, as well as it is live on a public platform, which is YouTube and Rumble. So I want you guys to know that all of our Secure Your Energy sessions, most of them are on a public platform, but some of them will not always be on a public platform. So if you are part of the buyback team membership, which is $19.99 a year, you'll have access to all of these actual Secure Your Energy sessions in order, in category, to help you along your process, because it's not only about investing in tax liens and tax deeds. You want to understand how to structurize your business if that's the route that you're going to go, and how taxes may affect you. So we're going to talk about taxes in the next up and coming week related to real estate. But before we do that, let's talk about business structure. So today we have a formal information session where I have a PowerPoint to share with you guys, and I'm going to put it on the screen. I hope you guys are having a great day, and I do thank you guys for getting to know Lashley. You know, sometimes I go early. My aim is to go between 11 and 12 o'clock. So what end up happening is if I feel like I'm going to be late a little bit, I put a later time, but then I say, hey, let's get it started because I have a lot to do. So I appreciate you guys. Thank you for being here. I have a lot to share, and this is going to be a two-part session because there's so much information, okay? So get your pens and papers ready. All right, business entity and tax information session. So some of the things we're going to go over today is how to register a business, how to register a corporation, which business structure should I use, type of business structures, comparing business structures and tax implication is like an introduction, which type of taxes do I need to file, and tax credits and tax deductions. So I just want to give you a heads up. The last two subjects here, we're going to do that on part two because it's so much information. Okay. How do I register a business? Know what business structure you will register your business as. So that's what we're going to go in so you can make an educated decision. And just know this is for information and educational purposes. And I want you to verify any information that I share with you according to your state. Okay. So select and register your DBA. This is a give or take. You don't always have to do that, but it is important for you to do it at some point of your business existence. Register your business on a county level, and that is most county have you register your business on a county level. Okay, some do not, but you want to verify. Register your business on the state level at the Secretary of State office. Okay, and that can be done online. Register your business with the IRS. Receive your certificate of incorporation. That's like receiving a birth certificate for your business. Okay, now when you register your business on a state level, that's when you're going to receive your EIN number. Okay. On a county level, they're just going to register you, just being existent. You pay, and you will also on a state level receive either a tax exemption or your tax participation number, and your tax participation number. And that's different from your EIN number. So when you know you go into particular stores, wholesale, they ask for this tax number. That's what you're going to get. Okay. So after you register your business with the IRS, receive your certificate of, excuse me, of incorporation. So registering your business with the IRS will go for corporations. Okay, and we're going to talk about that. Now, seeking appropriate permits and license based on your industry. It is very important for you to be compliant in whatever your business is, because if you're not compliant in these particular licenses, you may create more of a liability. And you know, the most important thing I always stress is to mitigate risk factors. We want to go in knowing as much as possible and be as right as possible, because if we have to go to court, we're going to be in good standing. Okay, and it's easier for you to participate in commerce when you're in good standing. For example, if you're selling a property and you're doing business in one particular state as an entity, and then you're selling another property or buy, you will most likely have to register in that state as a foreign entity. So there's the things that you have to do, especially if you want to sell the property and receive tax exemptions. Okay. Which business structure should I use? A business structure acts as a form of a legal organization for your business. Having the right business structure can offer personal liabilities protection. We're going to differentiate that as we talk about the different types. It is important to choose the right type of business structure because it can help guide your day-to-day business activity and operations. Okay, I just want to make sure we're doing good. Understand your business operations, such as spending, liabilities, and management of business, is some of the determination factors that you should consider when choosing a business structure. So before you choose a business structure, you want to know what type of spending you're going to have to do, the liabilities that come with it, and the management of it. You know, do it have to be complex, or could it be simple? That's going to help you determine what business entity you want to use. On a minimum level, a business should at least have a bank account, a legal structure created, as what we talked about in the last PowerPoint, and a way to operate in commerce. Okay, and that's usually putting yourself out there, creating contracts between the entity that you create and other businesses or customers. Creating business structure can separate the liability from personal assets. Now, this is in general. Okay, which business structure should I use? Choose a business structure. Choosing a business structure should be based on the needs of your business, the industry your business is in, and possible tax liabilities. I keep talking about that. There are four types of business structures that can be created: sole partnerships, proprietorships, I do apologize, sole proprietorships, partnerships, limited liabilities, corporations. Now we're going to get a little deeper into corporations because there is some misinformation pertaining to corporation and taxes. So we're going to kind of square that away today. Types of business structures. Now let's get into sole proprietorships. This business structure is the simplest and most used business structure. The business is considered the same as the owner. From many tax perspectives, and that's what it's supposed to do. Say, apologize for the typo. The business is not taxed separately from the person. So you want to know when you have a sole proprietorship, your taxes is not separate. That is one of the main things you want to highlight. All business assets, liabilities, and income is considered to belong to the owner. So whatever business assets you have and liabilities and income is going to come straight to the owner. And this is why the taxes is filed on a personal tax return. These type of business entities offer protections against business losses related to debt and or liabilities. Keep in mind, if a claim is put on a personal asset, creditors cannot pursue the assets of the business. This does not cover personal debt. So if you have a personal issue, it cannot come after the business. Independent consultants and freelancers usually use these type of structures, okay? Sole proprietorship. On the contrary, if the business loses money, personal assets and debt can be affected. So if the business loses money, personal liability can roll in. Lawsuits and claims can be brought against the owner's personal account and some assets. This is if the business accounts cannot cover the liability or debt. Sole proprietorships, the pro and cons. Pro and cons. So the pros is no cost to start up, easy maintenance, but it is a cost because you're going to pay registration on the state level. I believe it's like $25 or $50. EIN number is free. Registering for the county, they usually make you pay. So there are some startup fees, but it's not a lot. Easy maintenance. Cons, increased personal liability. So, for instance, if you are, let's say, a cosmetologist and you do hair and you freelancer, you're going to be responsible if you harm or injure somebody, even if you have a sole partnership set up. Little to no tax benefit. So it's really not a separation when it comes to your personal taxes on a sole partnership. Okay, this is just to indicate a business in most aspects. The startup and the maintenance of it is pretty simple, but you can always change your actual entity and advance it. Okay, now types of partnerships. Now let's get into partnerships. There's general partnerships and limited partnerships. Now, general partnerships, this type of partnership has two or more parties or partners that share the liability and personal responsibility. Unless written in a contract, both are equally responsibility for the day-to-day operations of the business. So general partnership is a 50-50 split. Limited partnership. This type of partnership liability can differ. Having a general partnership and or a limited partner, the general partner will be the one that assumes most of the responsibility and run day-to-day business operations, okay? And can have ultimate liability in, case there's a claim. Limited partners is also known as a silent partner, which can be also an investor, which is not involved in the day to day operations of the business and assume less liability because of no voting rights for policies or procedures are given, unless indicated in prior written agreements. That's where contracts come in, okay? Types of partnerships continue. Limited liability partnership. This type of partnership agreement gives partners limited personal liability, and that's all the partners, which means that they will not be liable for negligence or malpractice. Usually, these limited liability partners have insurance related to their businesses. Example, a doctor's office. When you have more than one doctors that come into one particular office and they go in and out, they share time. They usually set it up like a limited liability partnership. These type of partnerships can provide flexibility for all the partners regarding management and day-to-day operations. They are all responsible for determining the management and operation of the business. Okay. Types of business structures continue. Now we're going to go into general partnership. A general partnership, we kind of touched it. General partnership is someone like the sole partner. This business structure have two or more owners, so we already highlighted that. Taxes are not separate on partner income taxes. Partnership income taxes are categorized by their tax rates. Okay, so this depends on how much equity you have in the business, because partnerships can be a silent partnership, so or and you can have a certain percentage of ownership. All partners in the business must report distributions or payouts. It is done on their personal taxes. Okay, partnerships also have personal liabilities for debts and legal obligations, so you want to keep that in mind. Having a partnership, these partners are responsible for liabilities and debts and legal obligation based on the percentage of ownership. Okay. General partnerships continues. The pro and cons. Pros: it's easy to establish and create. Can offer a limited protection for partners involved in the business, meaning I'm only on it 20%. If the lawsuit $100,000, I'm only liable for 20% of that $100,000. Con: may not protect from all liability pertaining to specific industries. Now, as an example, I got to give you an example in healthcare. There's a thing called gross negligence. So if you have a liability insurance via partnership, um, gross negligence may not be covered under there, especially if you're being prosecuted. So that can be that's kind of like a con to that. If you think you have that ultimate protection, taxation process can be more complex in a general partnership. Partners are responsible for filing their own returns, highlighting that the IRS may require additional forms for the partnership to be submitted. So I've seen that in some instance where they said they had a partnership and one person submitted their tax information and the other person didn't, and was back taxed for a couple of years. It may not affect the person who actually did their taxes correctly, but it will affect the other person. Type of business structure. So now we're going to move on to limited liability companies, LLCs, our favorite. Any LLC is an entity that is created by an individual to utilize liability protection. That is the go-to for liability protection. That were only limited to corporation and shareholders at one point. So when we talk about corporations, S corps and C corps, you're gonna understand why that statement was made. But it was this limited liability companies. Limited liabilities are like partnerships, highlighting that they have pass through taxes in the same capacity as corporations when you're dealing with, I believe it's a S corp. We're going to let me verify that. Pass through taxes, taxation means that the LLC itself does not pay the taxes on income. Income and the profits are reported on the personal return for the owner as well. So, pass through taxes, which then are prompted to pay the taxes that are due on the individual level. So, this is with an LLC, limited liability, you will be filing your own taxes as well on your personal taxes. But the difference is that you have a barrier of liability, limited liability on um, things that may happen in that particular business. Does that make sense? So it's kind of like the saying when they say partnership, everybody got to do their own taxes, but it's still you still have a level of protection with partnerships. It's both partners share it equally or based on the ownership. Does that make sense? Benefits of LLC is that it provides a flexibility and limited protection. The way the LLC are taxed on a state level may vary, and that's where you need to talk to a tax expert, as well as always keep yourself current on particular tax law updates and what new parent presidents roll out. And we're going to go into that in part two. Limited liability companies. Limited liability taxation can become tricky, so let's keep that in mind. The IRS treats the LLC based on its characteristics, because everybody can file what you want, like an LLC. But at the end of the day, the IRS is going to treat you how you behave. I.e., example, if you have a trust and you're not treating the trust a business trust in the capacity that it needs to operate, there may be considered an LLC and not a trust, and tax you based on LLC. using pass-through taxation instead of taxation at one time when you put it into the trust or upon distributing in the trust. Does that make sense? This can mean that if a company sole proprietorship, the IRS may tax you based on sole proprietorship. The LLC is considered a sort of hybrid entity. So listen, LLC can be added on to different type of entities. We're going to get into this, the different levels that we talk about. This is because it can be elected with different business structures, okay? Which create an increased protection and flexibility in some business. So you can have hot chicken um, buffet. But when you say hot chicken buffet LLC, it creates another level of protection. That's why they asked you, is it an LLC or is it just a basic company? Like, do you see what I'm saying? If it's a sole proprietorship, okay? That's where LLC comes into. If the LLC is considered a partnership or a C corp, the tax due date may be in April. So we just kind of jumping the gun talking about due dates. So LLC and regular individual taxes are due around the same time, which is April. Guys, I got to do my taxes. I take 3 weeks to do my taxes. I'm planning. If the LLC is considered S corps, excuse me, the partners will have up to March to file their taxes. So it's the S corps, they have up until March if they're partners. And we're going to talk about the difference of a C corps versus a S corps when we talk about corporations, okay? Comparing business structures and tax implications, dealing with a corporation. Okay, so this is where you want to get deep. Get your pens and paper. Y'all can press rewind for this because corporations get a little tricky because you have to file it different and you have to follow different guidelines. Corporation. A corporation is a noted separate liability entity. So it's noted to be a whole separate entity from you, which creates a level of protection for you as the owner. And a statute is created through state filings. So there's certain filings that you have to file to bring this entity to life, okay? Corporate entities are subjected to corporate income tax. So you have a corporate income tax. Corporate income tax are based on the tax rate of the year, which can be adjusted yearly. Corporate income tax are given to owners via dividends. So corporate tax is based on the dividends that the owners own. And when we're going to talk about the type of F corp and C corps and how many owners can be in these particular organizations, that's going to tell you how many dividends you have and how much taxes you're going to pay. What's the rate that you're going to pay on these dividends? That may be subjected to double taxes. So you have corporate tax and then you're going to have dividend tax. You already see it starting to build up. That's why you want to have a big organization and a real corporation if you're going to do this correctly. See a tax expert for details. If owners receive a salary from the corporation, this is also taxed as personal income tax, okay? In any case, corporation does provide limited liabilities to its owners. So you will have a form of protection. That is the limited liability, LLC. That can protect the assets from the business debt and many legal liabilities. Okay. So we're going to talk about shareholders versus members, nonprofits versus profit organizations a little bit. Okay. Corporations. Shareholders in corporations has a high protection of liability. So if you're shareholders in within the corporation, you are protected. Taxation can vary in corporations. They can face a high operational tax cost and strict reporting. We're going to talk about the reporting, okay? In opposition to other business entities, corporation must pay taxes on any profit. That is not the same thing when it comes to other entities. This is you have to pay on profits, okay, as well. Stocks and dividends give the owners and investors are given to owners and investors are subjected to separate taxes via personal income tax. So you're getting taxed on what you get paid for. You're getting taxed on any dividends that come out or pay out. I do apologize. And then you get also tax on like corporate taxes off the top. Okay. Stocks and dividends given to owners, we just said that. One benefit of having a corporation is the ability to raise capital via stocks and financing. So, because you're going to be selling stocks for this particular business, you can grow it pretty fast if you're in the right industry, okay? And you have the right connects. Corporation, C corporations. Now, let's get into this. Most companies that incorporate their business automatically default to a C corporation. So, let's keep that in mind. You have to elect to be an S Corp. When registering as a C corporation, the entity can face double taxation, tax due to corporate income and tax to profits on the individual level. That's why if you register as a corporation, you're going to pay corporate taxes right off the top, and then any profit or individual stocks or dividends being given to you as well. There is an ultimate number of shareholders that can own a C corp. So there's a difference between C corps and S corps. The C corps, anyone can own corporations. So with C corps, there is no number of people. You can have 1,000 of people who own the business, and there's a 0.1% interest in it, and they have to pay 6% on it on a yearly basis. Does that make sense? But there's a difference with the actual C corp. Okay, I mean the S corp. I do apologize. So if you would like to be an S corporation requires special paperwork filing with the IRS. See IRS for detail. IRS form 2553. You want to look at that form. You want to know it and know when to file it and how to maintain it. S corporations do not face corporate tax. So this is a benefit of S corporation versus a C corp, but they do pay pass through taxes. And that is going to be the taxes on the individual level. Pass through, but that's a benefit, but then you have to do more paperwork with S Corps. Okay. Pass through taxes is the process where investors and owners claim profit and loss on their personal income tax. Sounds about familiar, right? These type of corporate a corporation has a maximum of 100 shareholders, so it can only have 100 shareholders, and that is divvied up. Whatever percentage they could owe, one could owe 5%, 6%, 10%, it all equals up to 100%, and they're taxed on that on a yearly basis. If the tax rate is 10%, that's what they're paid on if they're paid out. Okay. S corp memberships or owners must be U.S. citizens. So that's the difference from a C corporation and the S corporation. And most entities that are nonprofit, if they're going to be a corporation, they go to be a C corporation. Does that make sense? Pros and cons of corporations in general. Okay. Pros: there is a high level of liability protection for the S corp and C corp for owners. Shareholders are also protected and receive a high level of legal protection related to the business operations. A corporation is considered a legal person. It's a whole entity. It's this everything different. Just like most business, you would consider that because I talk about, the certificate of incorporation is like a birth certificate, the EIN numbers like a social security. Yes, in that particular aspect, but they all operate differently when it comes to taxes. Okay. So a corporation is considered a legal person. And you remember when we talked about law and the way laws apply, and basically a corporation is considered a person and they have the same responsibilities and liabilities as a person should have based on the law, not actual constitution, but you know what I'm talking about. So this is where this incorporates back into that concept that they consider a corporation actual like a human being and they have rights. Okay. And that's why corporations are in positions of control at this point. Does it make sense? Okay. So cons. Oh, and corporations can contract, make transactions as its own entity outside of the shareholders and everything. Okay. And this is what mitigates the risk factor between the two. Cons. These type of entity maintains maintenance is very costly, requiring more paperwork and a higher fee for establishing and maintaining the standards of operations. Okay, because you have to have board meetings. These are things we're going to talk about. You have to have somebody's going to do the minutes. You have to have a CEO. We're going to get into that. Corporations must have mandated operations such as the annual meetings, have appointed directors, and other state appointed regulations must be followed as well. That's why it's a little bit more complicated, even though they're taxed based on pass through taxes. How to register a corporation, and this is where it gets a little different because you can, as I explained to you the first way, but this is where the registration of a corporation actually happen, and it does happen through the way that you participate in commerce and the papers that you do file with the IRS, okay, and maintain. Understand the difference between business types. A corporation can be three different types of structure. It can compose of shareholders, which are also known as members, usually in a nonprofit organization. So, as I told you, sometimes the C corp should choose to be nonprofit organization because they can have millions of members. Must contain directors and officers. So it's a given that it has to have these two appointed positions. Determine if your entity will be a foreign or domestic entity. Domestic entities are entities that are created within the state. Foreign entities are entities that already exist outside of the current state that is seeking to register it. And that's what it determines a foreign entity. You don't have to be from another country. Like, me want to participate in Maryland. I'm in Georgia in my business. I'm a foreign entity in their eyes. Detailed information needed to be given, such as number of shareholders. You must maintain the number of shareholders because there's different documentations that you must submit and abide by. And total number of shares to register to the corporation with the Secretary of State. So shareholders, how much shares they have, via documentation, their signature, and then you're going to have an account with that sustain that information. That's why it's a little bit more complicated. This is how the registration of a corporation actually happens. So if you're on your taxes and you just change your business to a S corp or C corp, in this particular instance, the S corp, you need to make sure you have all of this stuff lined up because the IRS is not just going to allow you to have your business as an S corp and just use pass through taxes. Does that make sense? How to register a corporation. Okay, so if the business is a nonprofit organization, the number of members must be included. Please see IRS website for details. I'm not the IRS. I just like to research. Okay, guys. Have all the valid information that you need to file with the state. So you want the name of the corporation and the EIN number already established. Name and address of person filing for the corporation. AM principal office, mailing address if different. Okay, so you want the administrative principal office mailing address. That's the AM administrative. Number of authorized shareholders for a profit corporation. So members is nonprofit, shareholders are profit, and those both have to be listed, or number of members for a nonprofit, as we mentioned. Article of incorporation must be obtained on a state level and pay the fees. And make sure that you have an active email address because everything is mostly done online at this point. So most state does, except for Maryland. Maryland likes to do thing in person. So I guess the counties that I'm in because they're more rural. Okay, so corporations continue filing the correct paperwork. Okay, you must complete an article of corporation, as we mentioned. You must have that. Appoint a registered agent to create corporate bylaws. You must have a formal corporate bylaws printed out, and um, the shareholders must acknowledge this as well. Okay, and it must be a signature page with this. All right. Depending on the structure, have the correct number of shareholders for the type of corporation. C corps, 1 million people. S corps, no more than 100, and they all have to be documented properly. That's what makes it so complicated. Shareholders have to elect a board of directors. Yes, the shareholders plays a part in these particular entities, the corporation. You're not just the sole owner in all say all. Corporations mean that you have shareholders and that are considered that elect the board members, and the board members are the ones that kind of control your everyday function. I.e., the example is just like running a town. They have administrators, they have trust members, they have the mayor. And it's so funny because I've been watching about the Dalton mayor, so I'm finding out more of the structure of actual towns, and how the administrative process work, the check and balance systems. And these are really set up like corporations. That's why they say United States is like a corporation, and each state is its own corporation. When you look at its constitution, each state has its own constitution, and that's the same thing as example of bylaws here. You see where I'm going with this? But let me not go to the left. It just made me think about it, bring more things to life for me, how everything is a business in the United States. And if you understand that, you're going to be able to participate in commerce properly and effectively. So let's continue down our secure your energy session. Okay, I hope this information is doing you good. So the shareholders have to elect a board of directors, and this has to be documented, the minutes and everything, how it was done. The normal day-to-day operations of the business is headed by the officers of the corporation, the ones who the shareholders have elected. Example: CEO, COO, CTO, mayor, president. I'm just throwing that out there, y'all. I'm being bad, but I'm not. I'm being truthful. In both cases, S corps and C corps must follow strict compliance of documentation and other obligations such as issuing stocks, payments and fees, updating shareholders, and conducting director meetings that have minutes. Okay, so part two. I think we've been on, I don't know how we've been on for how long, but part two is going to consist of which type of taxes do I need to file? And I'm going to go into detail pertaining to each business structure. And we're also going to go to tax credits and some tax deductions that you want to keep in mind as a business owner. And this is pertaining to different entities that we talk about. Okay. Now, we only been on for 33 minutes. Usually I try to stay on for an hour. I want to show you some resources, and these are government resources where you will find information about what I have shared with you. Okay, so this is the IRS website, and I will share the link at the bottom of the video. I thank you for joining us on Secure Your Energy. All right, so here is the IRS website business structure. So when beginning a business, you must decide what form of business entity to establish. So we just talked about that, and it goes into each one: sole proprietorship, partnership, corporation, S corp, limited liability. It did not go into C corps right here, but I want you to hunt and go into C corps and see. Now this will give you an idea based on the IRS requirements. Okay, what to expect. So let me see. So here it says income taxes, self-employment taxes, estimated taxes, Social Security. If you're liable for these forms, you may need to file. Provide information, Social Security, Medicaid. That's if you have your own business as a sole proprietorship. So there's more information there. We're going to go into this publication. What is this? Where did I get? It says Guides to Starting a Small Business, and this is the IRS website, and I can leave this actual publication for you guys as well. I forgot where I clicked that. I know I'll be just finding stuff. So here is a guide to start a small business. This is brought to you by the IRS 2001 edition. This small business guide is intended to provide quick reference about federal tax consideration when opening and running a small business. So we're going to go into that a little bit when it goes into our next session. But we're going to share this link with you so you can see preparing taxes, filing, paying taxes, tax information, tools, resources. We're going to get into it, okay? We also have another link that we want to show you. Understanding the tax responsibility that comes with starting a business. Now, this is very important. You see, they disclose everything to you. Okay. We want you guys to be really educated and make good decisions so you guys can win, because we are the next generation of investors, owners, and system changers. If you don't understand that, oh, I'm so important today. And system changes, if you don't understand that. If you're interested in this type of information, it's because you like to do your due diligence. You want to understand the structure of our economy, real estate, because that's what I go in. I go into structure-based information so you can utilize this for your business on different levels. Okay, so I hope you find this information interesting and good for you to build yourself up. And if you do, please hit the like button. Okay, we try to move our way up on YouTube, Rumble, and I think we're on Big Chew as well and Facebook. Okay, if we could educate as much people as possible, my heart will be warm. Okay. Now, this last link we're going to share with you is understanding the tax responsibility that comes with starting a business. And this is brought to you on the IRS website. Now, mind you, they have small business websites for you as well. This is something we may go into the future of different resources for small businesses. I usually can give you resources and I can direct you in any state, but I will show you based on Georgia because there's a lot of resources in Georgia for small businesses. So in the future, we would do that. So here in this particular document link, here are some tips for new entrepreneur. Forms of businesses determine which income tax returns and business taxpayer needs to file. So proprietorship, again, I hit this one, but there's more information on this page. Choose a taxpayer year. So a tax year annual account period for keeping records and reporting income and expenses. Tax. So that's something that you want to keep in mind. Tax calendar year is usually 12 months, but as a new business, you want to calculate your spendings every 3 months. And if you're not spending that much, you could do it every 6 months. When you first start reporting your taxes on some state websites, they make you report every month. But if you're not making a lot of money, then they'll do it quarterly, or then they'll do it yearly. And then after that, if you ain't making money after 4 years, I think the IRS will consider your business an actual hobby. Okay, so take your time, but don't take your time too much. Okay, that's some things that I have learned. So this is what I'm going to share with you guys, so you can get started, so you can be prepared for our next live when we go into part 2 of business entities and tax information session. We're going to do a part 2, but we're not going to do it next week. Okay, we're going to spice it up a little bit next week, and we're going to get back into tax liens. Okay, and with tax liens, we're going to be going into over-the-counter sale highlights versus tax lien sale, in person, online, and what to expect. So we'll be going over that on Friday. Not this Friday, but next Friday. So I do hope to see you there. That's going to be a primetime home buyer buyback highlight, as well as after that next, I would assume Wednesday or Monday, if I'm off, we're going to go back into this tax information. Most likely it's going to be the following Wednesday, and we're going to go into your tax liabilities with each particular entity if you choose to register your business, okay, that particular way. So I hope you learned a lot today. I want to say thank you so much for being here with Ashley. Please join the buyback team, and we will see you most likely Friday. Gotta go.
The real estate market often seems like a distant world where only an elite of experts is successful. In a time of so much uncertainty in the air and bad news, realist investing can seem intimidating. But today, I want to tell you that if you make the right decision today, you can enter the real estate market from the back door. Bad credit record? No credit at all. Do you dread the idea of having a home loan? Do you dream of owning investment properties? You are in the right place and right time, because we have created a program which is a tax lien and deed investment online course of only 14 hours. This course is specially designed for people like you who have big dreams. You will learn at your own pace and everything from your home computer. This is your chance. Join our membership for $19.99 a year. What are you waiting for? Visit our website primetimehomebuyerBuyback.org and sign up today for course access.